Let me welcome you to Medzone African Motives. Uh, we are on accounting grade 12, paper 2. So it's all about term 2 revision. So in today's presentation, we are going to look at question 2 of the paper that was written in KwaZulu-Natal province in June 2025. So this is a June examination that was written in 2025. So with this question paper that was written in 2025, we are going to prepare ourselves with it so that we are going to be fully prepared and ready to write our June exams that we are going to write very soon. So remember that we did question 1 of this question paper. So this is the continuation of the very same question paper that we did in question 1. So that is that. Like question 1, like I've said in question 1, that there are no instructions that I have displayed, but you know very well that instructions are very, very, very important, that you cannot attend to any question without going through the instructions. Hope we are together on that. So like I've said, this is a question 2 of this question paper that was written in 2025. So let us quickly go to the questions now and then answer the questions. So here we are on our question 2, cost accounting. So we are on manufacturing. So as it says 2.1, good people, 2.1 as it says, Ndaba manufactures. Is what? Ndaba manufactures. And it says the information relates to the financial year ended 28 February 2025. The business manufactures one type of what? Of a head. So that is that. Now required, calculate the following. We are to calculate direct labor cost, and we are to refer to information C. For us to calculate the direct labor cost, the information C is a very important information that is going to help us to calculate direct labor cost. Also, we are to calculate the factory overheads cost for the year. And for us to calculate factory overheads, we are to refer to information D. That is the information that will be very helpful for us to do the calculation of a factory overheads. 2.12, prepare production cost statement for the year ended 28 February 2025. 2.13, it says, the owner is impressed that the factory workers never complained about working overtime to meet the targets. So now you have to provide the 2 reasons why factory workers choose to work overtime without any concern. These are the questions that we're going to answer on this question. Hope you get them. And then now let us move to information. We are now on information. So information A is all about stock balances. As you can see, we have raw material stock for 28 February when we started our year, and then to 28 February 2025, which is our year end. Also, we have work in progress and finished goods. But in information B, it says raw material issued for production amounted to 1,500,000. So that is that. Information C is what? Direct labor cost. It's all about the direct labor cost. But information D is about factory overhead cost. Information E is that the following were calculated after taking into account above information. That is the sales as well as markup achieved. So this is the information that we are going to use. Information A up to E is going to help us to answer our questions. So now let us go to the first question that we are to answer. The first question is that calculate direct labor cost, and we are told that we are to revert to information C. So let us go to information C, as we are told that we are to revert to this information for us to calculate direct labor cost. We are going to information C. So here we are to our information C, where we are to calculate direct labor cost. So on this information C, we are given number of workers. As you can see, we are given wages, we are given earnings per worker. So right now we are to calculate what? Direct labor cost. So the first step that we're going to start with is to calculate the normal wages. So normal wages, as you can see, is basic normal wage. If you can see that. So our basic normal wage, the rate that you're given is 50 rand. We are given what? Rate is 50 rand per hour. Rate is 50 rand per hour. That is that. And then each worker works how much? 2,000 hours. How many workers do we have? We have 10 workers. Let us get this straight, good people. We are saying, how many workers do we have? We have 10 workers. So each works how many? Each works 2,000 hours. We are saying each works 2,000 hours. And then what is the rate for our normal wage? It's how much? It's 50. The rate is equal to 50 rand per hour. This is the information that is going to help us to calculate the normal wage. With this information, we are going to be able to calculate normal wages. Hope we are together on that. So what are we going to do to make things easy for us to calculate normal wage? We are going to say 10, that is 10 workers, multiply 2,000. 2,000 is, we have said each works 2,000 hours. So also multiply by the rate 50. Are we together? Hope we are together on that. So this is going to give us what? 1 million. This is going to give us 1 million. That is how easy we are going to say. So meaning to say, we are going to say our total. We are going to say our total normal wage is how much? Is 1 million. We are going to say our total normal wages is equal to 1 million. That is that. So that is what you are going to write under our calculation. We are going to write this 1 million as what? As our total normal wage. So now, before we can even go to our answer book, let's try to finish off this. Let us try to finish off this. So this is our step one. This is our step one, grade 12s. This is our step one. So we are done with our step one. Let us now be on step two. Let us now be on step two. Step two, now we have to have our overtime wages, because step one is about what? Normal, is normal wages. Step 1 is normal wages. So step 2, now we are going to look at what? Overtime. We want what? Overtime. We want now overtime wages. Overtime wages. So now we want overtime wages. So that is that. So now let us be on overtime wages. So with overtime wages, it says if you can come to our question now for overtime. It says overtime, if you can look at it, it said is basic rate plus 80%. Basic rate plus 80%. And then the hours now on overtime is 100 hours. That is the information that you're going to use, good people. That is the information that you're going to use. So our overtime rate is 50 Rand plus 80%. 50 Rand is a basic rate, is a 50 Rand. So you're going to say overtime rate is equal to 50 plus 80% of 50. Let me write it so that it can be clear. On step 2, we are saying our overtime, good people, overtime is equal to 50. That is a normal rate plus 80%. That is 80% of 50 is 80% of 50. So meaning we have to find out the 80% of normal rate of what? Of 50. So it means that 80% of 50 is equal to 40. Sorry, is equal to 40. Is equal to 40, which is our overtime rate. So it means now 40 is what? Our overtime rate. Overtime rate, which is going to equal to 90 Rand per hour. So that is that. So remember that we have said each worker works 100 hours. Each worker works how many hours? 100 hours overtime. Overtime hours. So this is the information that we are talking about right now. So this is the information that we are talking about, which is going to help us now to calculate our overtime. So when you say 50% of 80%, 50% of 80% is going to give you how much? It's going to give you 90. So it's going to give you what? How much? We are going to say 50% of 50 is going to give you 40. So when you say 40 plus 50 now, why are we saying 40 plus 50? If you can remember well, we were told, good people, we were told that our overtime is basic rate, which is 50 plus 80% of our normal rate wage. So our normal rate wage now, we know very well that is what is 50. So we're going to say 50, our normal rate is 50, our overtime rate is how much? It's 40. So meaning you're going to say 50 plus 40. 50 plus 40, our 50 plus 40 now, it will give us how much? It will give us 90. It will give us 90. So how are we going to do there on overtime? We are going to say 10, that is 10 workers, multiply 10 workers multiplied by 100 hours that we have said. Each worker works 100 hours. Now, 100 hours times 90. So 90 is what? That is our overtime rate. So how much do we get when you multiply that? We get 90,000. So our 90,000 is what? It's our overtime wage. The overtime wage is equal to 90,000. Hope you're together on this, guys. Before we can even go to our answer book. Before we can even go to our answer book. So we are going to have our step 3. We are going to have our step 3. So our step 3 is that we have contribution. We are going to say step 3. So step 3, like I've said, it's about what? Employer's contribution. Employer's contribution. That is that. It's about employer's contribution. So now let us see how our employer's contribution, sorry for that. Just a mistake. Where we have this is just a mistake. It's just a mistake. It's just a mistake. So we are to write what? Employer's contribution. Employer's contribution. So like we have said, this is step 3. Step 3 we have said is employer's contribution. So employer's contribution, let us just get the information on employer's contribution before we can write anything under employer's contribution. Let us have information on it. As you can see here is our employer's contribution. It says employer's contribution is 12% of basic wage. How much is our basic wage? So our basic wage, you remember very well, is 1 million. Total normal wage is our basic wage. We are talking about this. So we are going to calculate 12% of that. Then that will be our employer's contribution. So that is that. So meaning to say we are going to say 12% of basic wage only. So we are going to say 12% of 1 million. So that will give us 120,000. It will give us 120,000. So that is that. So now we are to add we are now to get the final direct labor cost, because the question wants us to calculate what? A direct labor cost. So our final direct labor cost. Our final direct labor cost is how much? Our final direct labor cost, this is whereby now we're going to add what? We're going to add our normal wage of 1 million. We're going to add our normal wage of 1 million plus overtime of 90,000. Remember, you've calculated, plus contribution of 120,000. So all this will give you our normal wage of how much? Of 1,210,000. 1,210,000. This is our normal wage. This is our normal wage. So now we are to go to our answer book and write it there in our answer book after we have calculated everything. As you can see, we first calculated our normal wage. As you can go through it and see how we calculated our normal wage. Then we calculated our overtime wage. As we have said, is how much? 90,000. Then on our step 3, we calculated employer's contribution. and then our final direct labor cost, because we are asked to calculate final direct labor cost, is 1,210,000. So meaning to say, now we can write it neatly in our answer book, people. So let us go to our answer book. Let us go to our answer book. So our answer book, here is our answer book. So as we now know how we came up with those amounts, we are just going to write it this way. We're going to say 10 times 2,000. 10 is the 10 workers, 2,000 is the hours that they worked, and the rate, remember, it was 50. And then all in all, they give us how much? 1 million. All in all, they give us 1. All in all, they give us 1 million. That is that. So remember, we do have what? Overtime as well. So overtime, we still have 10 workers. So we have said each work how many? 100 hours. So we have said our, our rate for overtime is 90 after we've made that calculations. So it gave us 90,000. So employer's contribution, we have said it is 12% of normal wage. So our normal wage, remember, is 1 million multiply by 12%. Multiply by 12%, and it gave us 120,000. So we are to add this together. And when we add this together, we are going to get 1,210,000. So that is that for direct labor cost. That is that for direct labor cost. So now we are to move on to factory overheads. So that is the calculation for direct labor cost. So now we have to move on to direct labor, factory overheads cost. Factory overhead cost. Factory overhead cost. Because as you can see now, the question says we are to calculate direct labor cost, and then you can see we are done with that. We are done with direct labor cost. So now we are to be on to factory overhead cost for the year. And we are told that we are to refer to information D. So let us go to information D. Let us go to information D and try to find how we are going to calculate direct labor cost. Information D. So this one is information C. So information D, this is our information D. So first, let us try by all means to try to rub everything. Let us rub so that we can do our calculations here. So let us try to rub. So let us try to rub everything. So that we can have our space to do calculations for factory overheads. So hope we are together on that. Hope we are together on that. So that is that. So we are going to be on factory overheads as what the question wants us to calculate with people. So let us try to find out our factory overheads. Information D. The information is D. It says factory overheads cost. It says the bookkeeper calculate the factory overheads as 64,708. However, she made the following errors which must be corrected. So there are errors that must be corrected. There are errors that must be corrected, good people. So let us see how we are going to correct those errors. So the first one, it says the factory rent expense, 66,000, was included in the factory. This was included in the factory, and overheads amount was undercast by 20%. It was undercast by 20%. So what it means is that, what does undercast mean? That is very important. What does this undercast of 20% mean? The undercast mean that it means the amount of 66,000, which is this amount. 66,000 is only 80% of the correct value, not the full 100%. That's what it means. It means our 66,000, this amount, 66,000, is only 80% of what? Of the correct value. So it's only 80% of the correct value. 66,000, it means now with only correct amount of what? Of as 80% of correct value, not the full value of 100%. So let me write it so that people will understand. We are saying that 66%, this amount, 66,000, sorry, is only 80% of the correct value. Of the correct value, not full 100%. Not full 100%. Because this is why the reason why we are saying 66 is only 80% is because we are told that it was undercut by 20%. So when you subtract 100, when you subtract 20% from 100%, it's 80%. So it means this amount is only 80% of the correct value, not full 100%. So what are we trying to find? We want a full 100%. We want full 100%. We want full 100% of rent, but we are only given 80%. We are only given 80%, which is equal to 60,000. So now, the logic now, what does the logic say? That is very important. Now the logic say, if 8%, the logic now, very important. The logic says if 80% is equal to 66,000, get me straight, then 100%, then 100% is equal to how much? Sorry? Then 100% is equal to how much? Then you're going to say, then 100% is equal to a question mark. That is that. So that is very important. So now let us see how we are going to get the data. Let us see how we are going to get that. So let's quickly rub this information as it was for the first calculation that we did. Let's quickly rub this. So we are saying 100% now is going to be equal to how much? So it means now we are going to say, we are going to divide our 66,000 by 0.8, which is 80%. And this will give us how much? It will give us 82,000. It will give us 82,500. It will give us 82,500. And we are going to say 82,500 minus now 66,000. And it will give us now 1,000. It will give us 16,500. Sorry. So our 16,500, it means this is an undercast amount. Undercast amount. So that is how easy it is. So that is how easy it is for us to calculate a factory rent expense. For us to calculate rent expense. That is how easy we are to calculate the rent expense. So our undercast amount is 16,500. So let us go to our answer book and write it. So here we are on our factory overheads cost. The total there, as you have seen, is what? It's 764,780 before the errors occurred. So that is our total amount. So now we are to write what? Rent expense. Sorry. We are to write rent expense. Rent expenses. So our rent expenses, we have said, is how much? Is 16,500. We have calculated it together. So now we have to calculate insurance because there is a transaction that talks about insurance. But let us go and see what transaction is all about. So let us do our insurance. So for us to do our insurance, we are to now try to erase the rent now and be on insurance, good people. Let us erase. Let us erase our rent and be on insurance. Hope you are still together, good people. Hope you are still following. Hope you are still following. I'll be happy if ever you are. We are still on the same page. That will be my happiness. That will be my happiness. So let us just rub these calculations for rent and let us be on calculations for insurance. So what is insurance? What is insurance all about? That is very important. Insurance, what is insurance all about? So they have said annual insurance for the period of 1 July 2024 to 30 June 2025 was paid and allocated to factory, office, and sales in a ratio of 3:1 to 1, respectively. The office insurance amounted to 1,440 per month. So that is that. So what are we going to do here is that what we are going to do is simple with people. We are just going to say 1,000 1,440 per month multiplied by 12. And we are going to get how much? 1,780. That is the answer that we want. We don't want much lot. So one can ask, why do we just be short like that? We are short like that because what the question is asking you is to correct. Is to correct what? The key idea is that we are not calculating total insurance. We are correcting an error in a factory overheads. We are correcting an error in a factory overheads. What happened is that the question says insurance was allocated to factory, office, and sales in a ratio of 3:1. So it means factory, which is this one, is how much? Is 3 parts. This one is 3 parts. And office is how much? Is 1 part. And sales is how much? Is 1 part. So that is 5 of them. But what did the bookkeeper did? What did the bookkeeper do wrong, for example? They included office insurance. This one, they included this office insurance. They included office insurance. That is what the bookkeeper did wrong. They included office insurance in a factory overheads, which is wrong. Which is wrong. Because office insurance is an administration expense, so it does nothing with factory overheads. It does nothing with factory overheads. So what do we do to fix that? We only need to remove the part that does not belong to factory. And the only part that does not belong to factory is this amount. 1,780. So it means now we are going to our answer book and remove that. So we are going to our answer book. So in our answer book now we are going to say under factory we have insurance, and then we are going to say minus 1,000, 17,000, sorry, 280. So we are to minus this because this amount is for office insurance, and office insurance is not part of what? Factory overhead. So that is that, and then we are to get the amount for factory overheads. So you are going to add the total with 16,500 of rent expense minus 17,280 of insurance office, and this will give us how much? Will give us a 764,000. It will give us 764,000. So that is that. We are done with factory overheads. So now let us go to another question. Good people. Let us go to another question. So the other question did ask us to do what? Let us go to another question. So that is that. So let us be on another question. The other question wants us to calculate the production cost statement for the year ended 28 February. Production cost statement. So with production cost statement, let us go to information. So our information is that we are going to first start by direct materials. And our direct materials is 1,500,000. It says raw material issued for production amounted to 1,500,000. So let us go to our answer book and write that amount. Here is our production cost statement. So we are going to say direct material cost. Direct material cost. How much is our direct material cost? Is 1,500,000. Then we are to calculate direct labor cost. Direct labor cost. Our direct labor cost, if you can still remember, we calculated how much was our direct labor cost. Here is our direct labor cost. How much is it? This is 1,210,000. So we are to write it there in our production statement. Sorry. So we are to write our direct labor cost, which we are to see 2.11. So it's how much? It's 1,210,000. So we add our direct material and direct labor cost to get what? Prime cost. So for us to get prime cost, we are going to add direct material cost plus direct labor cost. And then we are going to get 2,710,000. 2 million, what is it? 2,710,000. This is our prime cost. This is our prime cost. So as you can see. So now we are to have what? Factory overhead cost. We are to have factory overhead cost. Factory overhead cost. So our factory overhead cost, that is when we are going to add prime cost plus factory overhead cost for us to get that. We are going to add what? We're going to add, so the factory overhead cost, we calculated it. Sorry for that. We calculated it. So we are to come to this amount. This is the amount for our factory overheads. So we are just going to write it there. Factory overhead cost. Our factory overhead cost is what is the amount that we calculated is sorry to write with this in. Our factory overhead cost is 764,000. 764,000. So that is our factory overhead cost. So now we are to have what? A total manufacturing cost. Total manufacturing cost. So for us to get total manufacturing overhead cost, we have to add prime cost plus factory overhead cost. Factory overhead cost. So we have to add these two. We have to add prime cost plus factory overhead cost. Then we'll get our total manufacturing cost. So this will be how much? Total manufacturing cost will be 3,474,000. Will be 3,474,000. That is our total manufacturing cost. That is our total manufacturing cost. So now we have to have work in progress at the beginning is given is 26,000. So you can see it even on the information that is given. You can see it even on the information that is given 26,000. So this is our work in progress, as you can see. This is the amount that we are talking about, 26,000. So now let us go to our answer, we can try to find what is expected out of us to calculate now. So we have 26,000 26,000 as our work in progress. So now we are to add that 26,000 to our total factory overhead cost. So we are going to add what? We are going to say 3 million 400 and we're going to say 3,476. 3,476. So it should be 476,000. We are wrong with the amount wrong. Total manufacturing cost. Sorry. There's something that is not going well. I don't know what is happening. So total manufacturing cost is how much? Is 3,474. So it was correct. 474,000. So you're going to add our work in progress, and then we are going to get 3,500,000. So that is that. So now we are going to have work in progress at the end of the year. So of which we are going to subtract it. So with that one, for us to calculate it, as we know very well that we are not given that the closing work in progress. We are not given the closing work in progress. We only have what? The opening, which is in 29 February 2024. So we are going to say our finished goods, which is 552,000 minus 26,000 of our opening for us to get our work in progress at the end. So we are going to subtract our 26,000 from our finished goods. So that is that. So this will give us 526,000. 526,000 as our closing work in progress. So we're going to say this is going to give us 526,000. So it will give us 526,000. That is that. So our total production is going to be, we are going to say our total production is going to be 2,974,000. So that was that. So now let us go to another question, 2.13. 2.13 says, the owner is impressed that the factory workers never complained about working overtime to meet targets. Provide 2 reasons why the factory workers choose to work overtime without any concern. So let's quickly answer that question. 2.13. So our answer, as it says, provide 2 reasons why the factory workers choose to work overtime without any concern. So the reason can be passion for work to achieve positive results. It can be passion, a passion for work to achieve positive results. to achieve positive results. So that is that, or contribution towards, or due to financial incentives. Due to financial incentives. That would be one of the reasons why the factory workers choose to work overtime. Also, it can be due to can be to demonstrate commitment. It can be to demonstrate commitment. Can be to demonstrate commitment as well as reliability. To employers to meet business targets. Those can be the reasons for that. So now let us go to another question, which is 2.14. We are on 2.3, the last one. So now let us be on 2.2. Let us be on 2.2. So 2.2. 2.2 says Zebu Kulu pens. So it's a Zebu Kulu pens. It says the business manufactures one type of pen and is owned by Pep Odiola. So the financial year ended on 28 February 2025. Required now, calculate the break-even point for the year ended 28 February 2025. So that is the first requirement that we are asked to do. So for us to calculate the break-even point, we are going to first look at the total cost. So we're going to say total cost divided by selling price per unit minus cost or variable cost. So let us see the information. We are going to say so let us be on our information. Let us be on our information so that it will be easy for us to calculate those. So here is our information that will allow us to calculate the break-even point. So this is the information that we're given to for 2.2. So we are going to say our total cost divided by selling price per unit. Per unit minus variable cost per unit. Variable cost per unit. So that is how we are going to calculate our break-even point, because we are asked to calculate what? Break-even point. We are asked to calculate what? Break-even point. So that is that. So now we are to look for our total cost now. As we can see now, our total cost is how much? Is 2,442,375. This is our total cost. 2,442,375. Divided by our selling price per unit. Selling price per unit is this amount, which is 104.10, minus variable cost per unit. Our variable cost per unit is what? 36.10. So this is how we're going to calculate it. So this will give us how much? Will give us 35,917.3. So that is that. So that is how we answer our question 2.21. So this is the answer for question 2.1. And then we go to our answer book. So here we are on our answer book. Remember, we are asked to calculate break-even point. Break-even point. So like we have said, we are first going to start with our total cost, which is 2,442,375 divided by our selling price per unit of 104.10 minus our variable cost per unit, which is 36.10. And we have said all in all, they will give us 35,917. So that is our answer. So now let us go to question 2.2. Let us go to question 2.2. 2.2 says, explain whether the level of production achieved is satisfactory or not. Quote figures to support your opinion. Is it satisfactory or not? And we have to quote figures. So for us to quote figures, let us attend to our information. So as we can look at our information that we are given, as we can look at our information that we are given for us to support our answer, you can see that the business produces 41,750 units. Tweaking of these units. That's the units that they produce, but their break-even point is 35,970. So that is that. We can say it's 35,970. So it simply says the business now is more than our break-even point. It's more than our break-even point because now it forces you to say 41,750 units minus 35,917.3. So now it will give us what? A profit. It means now we are going to have what? A profit. It's going to produce how much? That is more than our break-even point. So it means now we are going to have 5,832.7. So that is that. So what does that mean? So it means that the business is making what? It's making a profit. So that is that. So it means that the business is making what? The business is making profit of this much because of our break-even point was 35,917 and we were able to exit that. So that is that. So we are to write that on our answer book. That is 2.22. So we are saying the business produces 41,750 units. And our BP is, how much is our BP? is 35,917.3. So what does that mean? It means that the produce now is how much? So it means now the produce, we're talking about the produce now. How much is our produce as we have calculated it? So our produce is 5,832,000.7. 5,832.7. 5,832 is 5,832.7. So it means the business is making profit because this is more than our break-even point. We are saying more than uh, more than the BEP, more than the BEP, making a profit, making a profit. So that is that. Oh, this is our, it makes what? A profit. This is our profit. So that is that. So also you can see that our BEP increased from 34, our BEP break-even point increased from 34,244 to 35,970. So it means that is an increase because you are going to say 35,970 minus 34,244. So it means it has increased with how much? It has increased with 1,600 and 1,673. So that is the increase that we are talking about. Hope we are together on that. So one can ask, where did we get this BP from 34,244? So let us go to it and try to find where did we get that. Very important that we understand that. You see, our our break-even point was 34,244 units. So it has increased to 35,970. So that is our break-even point. This is the increase that I'm talking about, 35,970. So that is the increase that we are talking about. Hope we understand each other on that. So now let us go to another question. As we were asked to calculate the break-even point, now we are asked to explain whether the level of production achieved is satisfactory or not, and we are to code figures. We are to code figures. That is 2.23. That is 2.23. So let us go to our information. So here we are on our information for us to answer that question. This is the information that we are to use. So as you can see now, PEP is generally satisfied with the management of the variable cost, but is not pleased with the control over direct labor cost. Direct labor cost. Because if you can look at for us to justify his concern by quoting figures is that direct labor cost increased from 980. Direct labor cost increased from 980 to 1470. That is where we can say the concern is. So direct labor cost increased from 980 to 1470. So it means it has increased by how much? it means it has increased by 490, which is 50%. So that is that. So this is how we are going to answer it. As we can see, the increase, because the question wanted us to know whether whether the level of production achieved is satisfactory or not. So that is why we have said this Pep is satisfied with the management of variable cost, but is not pleased with the control over direct labor cost. We can see our direct labor cost, they have increased. So the business has incurred expenses because from 2024 to 2025, it has increased to by 490. So that is what we are to write on our answer book. So that is what we are to write on our answer book. 2.23. We are to quote what figures. So this is where we are going to say our direct labor cost. We are going to say our direct labor cost. Direct labor cost increased. Direct labor cost increased from 9 Rand 8 to 14 Rand 70. So it means it has increased by 4 Rand 90. So that is that. So now we are asked to provide the three suggestions can be important to address the problem. So is to train workers to work effectively. Train workers to work effectively. Also restrict overtime. Restrict overtime. Better supervision by the foreman. Better supervision. Better supervision by the foreman. So these are the solutions to this problem of direct labor cost. So that is that. So now let us go to 2.24. 2.24. So our 2.24 says, PEP is considering using computerized machinery as an alternative to manual labor. So it may result in some workers losing their jobs. So explain 2 points that he should consider before taking this step. That is 2.24. So let us attend to it. Let us attend to it. So PEP is considering using computerized machinery like we had as an alternative to manual labor. So it says this may result in workers losing their job. So explain 2 points that he should consider before he can take this step of going for computerized machinery. So he must know that maintenance and installation of a computerized machinery are costly. That is that. So computerized maintenance and installation. Maintenance and installation Maintenance and installation of computerized machinery are costly. Maintenance and installation are costly. So they are costly. So that's that. For computerized machinery. Also, computerized machinery will need substantial initial capital. Computerized machinery will need will need a substantial will need a substantial initial capital investment. So that is that. So now let us go to 2.25. 2.25 says 2.25 PEP wants to increase production by 800 units during the next financial year while maintaining cost. So calculate additional profit that you will achieve. So we have said while maintaining what cost. Very important that one. So what we are going to do is that before, as we have said, we have that is what 800 units. We are going to say selling price per unit minus 36.10. So meaning we are going to minus what? We are going to subtract our variable cost, which is this one, from our 104, which is our selling price per unit, 104.10. And that will give us what? 68. So that is what you're going to do. So let us write it. Like we have said we are going to say selling price per unit minus variable cost per unit. Variable cost per unit. And our selling prices was how much? 104.10 minus 56.10. And this will give us 68. And then we are going to say 68 multiplied by the 800 units that we're told about. So meaning we're going to say 800 units multiplied by 68. So this will give us how much? 54,400. So this is the end of this presentation. Good people, make use of this presentation as it is very helpful and it will help you a lot when you write your coming examination. Thank you very much.